If you'd like to learn how to trade Forex with $100 using sound risk and money management, then look no further. In this video, I'm going to share with you a cool little trick which is going to help you to make money trading Forex with as little as $100 without over leveraging your Forex trading account or exposing it to excessive risk like the losing majority of Forex traders. So keep watching. As you can see on the screen, I'm currently inside the MetaTrader 4 Forex trading platform, and the starting balance for the account which we're going to be using as an example here is $100. Now, the reason why you can't trade $100 on a standard Forex trading account is because it's not going to allow you to practice proper risk management. So let me show you exactly what I mean. Let's assume you're trading with a simple price action trading strategy. You buy the dips in an uptrend and you sell the rallies in a downtrend, okay? You're just kind of following the trend. Now, the thing is, if you're trading on the higher time frames, something like the 4-hour time frame or the daily time frame, your stop losses are going to be very, very wide. And since your stop losses are going to be wide, by extension, your risk per trade, even on the most minimal lot size on that trading account, on the standard account, is going to be way more than you're supposed to be risking if you're supposed to be practicing sound risk and money management. Now, let me show you exactly what I mean. Let's take, for example, this chart, which is the daily chart of the Euro-USD currency pair. At the moment, it's in a downtrend. Why? Because price has been making lower lows and lower highs. Lower lows, excuse my drawing, lower highs, okay? So, just at a glance, you've seen that this currency pair is in a downtrend. Now, let's assume you would like to sell this currency pair when it reaches this previous high where price got rejected at. And obviously, when you see an extension, an exhaustion candlestick. Now, let's say you wanted to, sell this currency pair at 102.80 price level, at the 102.80 price level. Now, your stop loss, let's say you wanted to be placing your stop loss, a rather safe stop loss. So you wanted to place it a little bit above this previous swing high where price got rejected at, so that, even any liquidity grab will hopefully not, take you out before the real move starts to move in your direction, okay? So let's say you wanted to place your stop around the 1.0480 price level, okay? Now, here's the thing. Let's say you wanted to take this trade and you wanted to trade with the smallest lot size on this account. Now, if I quickly pull out my position size calculator, you'll notice that if our entry price was the 1.0280 price level, like we did our analysis, and our stop loss was supposed to be placed at the 1.0480 price level. This is a pretty wide stop loss. Obviously, to drive my point home, that's why I'm using a stop loss that's this wide, okay? And you wanted to maintain a 1:2 risk to reward ratio. Let's assume that you wanted to, get into this trade with the smallest lot size available on this account, which is 0.01. So let me quickly bring up the lines so that you can see what we have here. Okay. So here is going to be, this is where we're going to be placing our trade entry level, and our stop loss will be placed at the 1.0480 price level, right? Here. Yep, here's the problem. All right. So as you can see from this example, if we wanted to take this trade, even with the smallest lot size on this account, we would still be risking around 20% of this account's capital. Why? Because this trade, even with the smallest lot size, is still going to cost us around $20. And there's no way, it's never in line with proper risk management for you to risk 20% of your trading account's capital on a single trade. Okay, there's no professional trader who knows what they're doing. He's going to advise you to do this. Okay, so obviously, even if, let's just place this order so that you can see it for yourself. Sell limit, and this is going to be the order. Okay, now when I hover my mouse, let me just take this horizontal line off of the charts. When I hover my mouse's cursor over this sell limit pending order, you can see that obviously we're risking around $20 for this 200 pip stop loss. Even though our risk to reward ratio is 1:2, We don't want to be trading like this because we're going to encounter losses. Now, there's a better way to approach this, and this is exactly what I'm going to be showing you how to do next. So what's the solution to this problem then? Well, there are actually two fixes which I could think of off the top of my head at the moment. The first is, you're going to need to find yourself a Forex trading broker who offers micro accounts. So for those of you who don't know, micro accounts are accounts where when you deposit money into the account, when you deposit, for example, US dollars, the balance is not going to show you US dollars. Instead, it's going to show your balance in cents. So you can see on the screen, this is an account which I traded. And initially, I deposited $20 into this trading account. But as you can see from the screen, it's actually not showing you $20, but rather it's showing you 2,000 US cents. Okay, so when you get this type of trading account, it's going to give you the opportunity to practice sound risk management, because when, for example, you want to take a trade and you want to risk only 1% of your trading account's capital on that trade, well, guess what? For using this account as an example, 1% of this account's balance is going to be 20 cents. If you were trading on a standard account, that would be something like $20, which I showed you from the previous example when we were in MetaTrader, which you couldn't really do because you're risking $20 on a $100 account. That's just going to be very, very poor risk management. But with this type of account, then you can risk 1% of the account, which is going to be 20 cents, and the lot size are going to work out perfectly because the account was designed to kind of solve this problem. Well, this is the first fix which I thought of and which I am presenting to you right away. So in case you don't know any broker who offers cents account, I have linked to some of the brokers which are reliable, which offer cents accounts which you could trade with a very, very small capital in the description of this video. Now, the second fix for this problem is for you to go the funded trading accounts route. So what exactly do I mean? Well, you could decide to, instead of funding your account and trading $100, which anyways, the gains which you're going to get from the account are really going to be small, especially if you're living in, where the cost of living is a bit high, then you're really not going to find, any motivation trading those small capital. Then you might want to, instead of funding your account with that $100, you might want to buy a challenge, okay? When you've proven to yourself that your trading performance is up to standard. Okay, so the examples which I am using in this video are two funding programs which all offer funded accounts or funded challenges which are less than $100. So the first is the Fivers. As you can see, the Fivers offers the Bootcamp Challenge, which is actually 300 euros. But for starters, you're only going to need to pay them 85 euros to get your account. And then when you take the challenge and you pass it, then you pay the remaining 215 euros to get your live funded account, which is going to be a $100,000 account. Now, this is very, very good because you might take a couple of these challenges and you'll be refining your trading skills and honing your skills so that when you get your funded account, by then you have the capital to actually trade the way you want to, and you're going to get profits from it, which are going to be worth the efforts you're putting in. Now, the second option is, with the funded route, is going with My Forex Funds. Now, My Forex Funds also offers an evaluation account, which is actually two evaluation accounts, which are less than $100. The first is their $5,000 challenge, which only costs $49. And the second is their $10,000 challenge, which only costs $84. So you can see that with only $100, if you decide you want to trade Forex, then you could go with the option of finding a broker who offers micro accounts so that you can still trade that $100 and still practice sound risk and money management. Or you could invest that money with prop firms and trade on challenges which cost less than $100 so that if you eventually do pass them, you're going to get much more capital than $100, which is going to help you to start your Forex trading journey on a firm footing. But here's the thing. Whether you're trading $100 or a $100,000 account, chances are pretty high that you're going to blow it if you're still struggling to become a consistently profitable Forex trader. And that's exactly why I created the Profitable Forex Trading Blueprint series, which is a crash course designed to teach you exactly how to become a consistently profitable Forex trader in a step-by-step manner. Just click on the link in the description of this video or head on over to FXMindTrixAcademy.com/blueprint to get free instant access to the crash course. In the meantime, If the thought of making slow and steady gains on a $100 Forex trading account doesn't excite you, then click on this video to learn how to make up to 500% return on investment in less than 3 weeks of trading through flipping small Forex trading accounts. See you in the next video.